A simple yes or no.
Yes, we have.
Yes, we have.
Okay, what would those be? What would those be?
Well, Senator, we introduced a no overdraft account a few years ago. It represents about 30% of our new sales, especially to young people. It provides no ability to overdraft, which saves consumers and helps them manage their finances. It is available for $5 a month as a flat fee, and for students and people under the age of 24, it's free. And that's a type of account. It's consists with a bank-on set of accounts. We have about 2.5 million of those outstanding so far. And as I spoke earlier about, we have our Advantage borrowing product, which allows $500 emergency borrowing for a $5 fee with no interest.
Similarly, yeah, thank you, Senator. Similarly, back in 2014, we introduced an account called the Access Account, which provides no overdraft fees. It's a very affordable savings and checking product. And we work with entities like the National Urban League to make sure that this gets driven into some of the underserved and unbanked communities, and do a big push to make sure that there's awareness of this product.
Well, we'll be happy to look at some of your programs, because this is a critical element of getting a very large part of the American society to be able to be banked and instead of going to the check cashing place, the payday lender or the pawnbroker. Mr. Scharf, Mr. Fraser, Mr. Dimon, do you have a small dollar loan product of $500 or less similar to Bank of America?
We do not.
I do not believe we have one, Senator.
We do not.
This is one of the critical elements of being able, I share Senator Round's views that you're all important institutions, not only in our financial system, but in our economy. I share that from my perspective also as the chairman of the Senate Foreign Relations Committee. I know our global competition, but I think that all of you have both the ability and, my view, a responsibility to bring more people into our financial system as a portal of entry instead of where they are, which relegates them to far lower opportunities in the future. And I hope you'll do that. Let me ask you, I looked at the lending that you all did, and particularly as it relates to COVID related, are you taking any serious and comprehensive measures to expand your relationships with small businesses? Any of you?
I think we're almost all of us making extensive efforts, particularly making sure we open branches. I think most of us have 25 or 30% of our branches in LMI, majority minority neighborhoods. Most of us have small business programs with outreach and partnering with CDFIs. Most of us have put money into equity or loans into MDIs who are in those communities. And so, yeah, we're all making fairly extensive efforts and hope to do more.
I looked at your PPP lending, and in fact, there is a disconnect between what I'm being told and the number and distribution of PPP loans, especially as it relates to minority-owned small businesses. So I'd like to call that all to your attention. Maybe you're not getting the right information internally. Let me ask you two final questions. I have been the biggest champion of diversity and disclosure. Do you all believe that it's necessary to seek diversity, particularly for the bottom line, from my perspective? Study after study has shown that. And do you believe in the public disclosure of your companies in terms of diversity on corporate boards and senior executive management? Yes or no would suffice.
Yes.
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 And finally, do you believe that comprehensive immigration reform would help us build a more robust, stronger economy?
Absolutely.
Yes.
Absolutely. Yes.
Yes.
Thank you, Mr. Chairman.
Thank you, Senator Menendez. You got more questions in 5 minutes than I've ever seen any member of this committee. So Senator Tillis is recognized from North Carolina for 5 minutes.
Thank you, Mr. Chairman, and thank you all for being here today. I first want to thank you all for the mobilization effort for the Paycheck Protection loans. I think it was Herculean. I know that financial institutions across this country saved countless businesses and millions of jobs. So I thought it was particularly extraordinary that you did it. and were underwriting or taking applications before you really even knew the full rules of the road. So thank you for doing your part and helping us bridge the gap with COVID-19. You know, I would normally in these committees like to talk about business issues like some of the Fed supervisory functions that I think are inherently unfair, where you're basically dealing with a Fed supervisor who's judge, jury, and executioner without any due process. That's something I took up with Chair Quarles yesterday, but today I want to talk about a subject that I would seldom bring up in these committees. Goldman Sachs, Bank of America, Citigroup, and Wells Fargo signed a political statement which ran in the newspapers. It read in part, "We should feel a responsibility to defend the right to vote and oppose any discriminatory legislation or measures that restrict or prevent eligible voters from having an equal and fair opportunity to cast a vote." I don't think the statement specifically referenced the Georgia law, but that was what was being talked about in the press at that time. It was roughly the same time we were having a debate about the validity of the arguments, and I think that there's a fair basis for saying that that characterization, if it related to the Georgia law, may have been unfair and more of a political statement than an empirical observation of the statute. Look, the right to participate in politics without government reprisal is the cornerstone of an equal and fair opportunity to cast a ballot. Efforts to reduce political protections or allow a government to stifle dissent certainly seem antithetical to your statement when it comes to some of your global operations. All 6 of your companies have significant presence in Hong Kong. Yet over the years, the Chinese Communist Party has systematically chipped away at electoral rights for Hong Kong. Take, for instance, the national security law just passed last year under the direction of the Chinese Communist Party. Under this law, if an individual engages in activities aimed at dividing China, subverting the state, or generally endangering national security, they face harsh penalties, often life in prison. This is enforced solely by the Communist Party-aligned National Security Committee and does not allow a defendant to take their case through the regular judicial system, if there is such a thing in China. This law is meticulously designed to prevent equal and fair opportunity to cast a ballot in Hong Kong. Hundreds of thousands in Hong Kong took to the streets to protest this law. And correct me if I'm wrong, but I haven't seen any statements for your companies on this. It was announced last week that the first person will be charged under the national security law, and they're going to face a trial without a jury. Instead of the individual going before a jury trial, they're going to go before a 3-judge tribunal under the direction of the National Security Committee, a shocking departure from the common law traditions of Hong Kong. I'm curious if any of you would make a statement today defending the right of the accused to a fair trial by jury and not a politically suspect tribunal in Hong Kong. That national security law is clear that it applies to all residents of Hong Kong, including expatriates and foreign nationals. You have an obligation to defend your employees. So I wondered if an employee found themselves charged under this law, would you speak up? Several of your companies are in the process of expanding operations in Hong Kong, even after the Communist Party has destroyed any semblance of democracy. Now the Hong Kong legislature is working on bills to provide tax breaks, limit disclosure requirements, and eliminate taxes on carried interest. These measures are clear efforts by the communist leaders to persuade businesses to remain in Hong Kong despite the political upheaval. A Hong Kong finance professor went so far as to say, to keep these people around, we have to give them a tax benefit. A Hong Kong lawmaker said, the signal to the business community is very simple. Stay out of politics. This is the stance of the Communist Party and apparently the cost of doing business in China. Whatever our failings, the United States clearly and unequivocally does not assert these costs to businesses who operate within our borders. The United States does not set up extrajudicial systems to deprive citizens of their right to engage in politics. And the United States does not seek to quash dissent. We protect it. I hope you all keep these undeniable facts in mind should you choose to weigh in on American political issues in the future. But if you do, I expect consistency across the globe. Thank you, Mr. Chair.
Thank you, Senator Tillis. Senator Warren from Massachusetts is recognized for 5 minutes.
There we go. Thank you, Mr. Chairman. As the pandemic swept across our nation, bank regulators worried about the health of our biggest banks. So the regulators were generous. They gave the banks all kinds of help. They delayed compliance for important regulations. They relaxed standards. They even allowed banks to avoid paying overdraft fees if their accounts at the Federal Reserve had a negative balance. Now, when asked why they were being so generous to the banks, the regulators explained that the banks would, in turn, help their customers. So how exactly did that work out? At the start of the pandemic, bank regulators issued joint guidance that recommended that banks waive overdraft fees for their own customers. In other words, if someone was laid off, for example, and bounced a check, the regulators recommended that the bank automatically waive the fees and let people get caught up without paying $35 every time they stumbled. The same way the bank could do at the Fed if it overdrew its account. So let me ask the CEOs of the four banks, Citibank, Bank of America, Chase, and Wells Fargo, the four banks that collectively manage tens of millions of checking accounts for customers. While you automatically and at no cost got complete protection from overdraft fees at the Federal Reserve, could you please raise your hand if you gave the same automatic protection to your customers and automatically waived all of their overdraft fees? Okay, I'm not seeing anyone raise a hand, and that's because none of you gave the same help to your customers that the bank regulators extended to you, help that the bank regulators recommended that you give. So let me focus in on this just a little bit here. Let me start with you, if I can, and ask the question about whether or not any of you didn't automatically waive. I just want to take this on down. So let's take a look at who actually paid these fees. According to Pew Charitable Trusts, it's disproportionately working people making less than $50,000 a year, African Americans, Hispanics, people who are struggling to get by. And how much did they pay in overdraft fees? They paid a combined $4 billion. So let me start with you, Mr. Dimon. You are the star of the overdraft show. Your bank, JPMorgan, collects more than 7 times as much money in overdraft fees per account than your competitors. So, Mr. Dimon, how much did JPMorgan collect in overdraft fees from their consumers in 2020?
Well, I think your numbers are totally inaccurate, but we'll have to sit down privately and go through that.
These are public numbers.
And I also want to point out we did not overdraft.
Can you just answer my question?
We
How much did JPMorgan collect?
We did not overdraft at the Fed account. And at any request,
so you never.
Said they needed,
I'm sorry,
they needed
Mr.
COVID
Diamond.
relief.
That was Mr. Diamond. That was not the question.
On request.
Did you had an automatic protection? So I'm asking. You were recommended. The regulators recommended you offer that same kind of protection to your customers.
And
how much, in fact, did JPMorgan collect in overdraft fees from their customers in 2020? Do you know the number?
I don't know the number in front of me, but
well, I actually have the number in front of me.
It's
$1.463 billion. That's nearly $1.5 billion that you collected from your customers. Now, do you know how much JPMorgan's profit would have been in 2020 if you had followed the recommendation of the regulators and waived overdraft fees to help struggling consumers? In other words, without that overdraft money, would your bank have been in financial trouble?
We waived the fees for customers upon request if they were under stress because of COVID.
You know, I appreciate that you want to duck this question. Do you know how much your profits would have been if you'd actually waived all the fees as the regulators recommended?
We waived the fees every time.
The answer is your profits would have been $27.6 billion. I did the math for you. So here's the thing. You and your colleagues come in today to talk about how you stepped up and took care of customers during the pandemic, and it's a bunch of baloney. In fact, it's about $4 billion worth of baloney, but you could fix that right now. Mr. Dimon, will you commit right now to refund the $1.5 billion you took from consumers during the pandemic?
No.
Right now?
No.
No. That's right. Over the past year, you could have passed on the breaks that you got from the Fed to your customers, but you didn't do it. Everybody else here, those other three bankers, will any of you agree to refund the overdraft fees that you collected? I didn't think so. So no matter how you try to spin it, this past year has shown that corporate profits are more important to your bank than offering just a little help to struggling families, even when we are in the middle of a worldwide crisis. Thank you, Mr. Chairman.
Thanks, Senator Warren. Senator Kennedy from Louisiana is recognized for 5 minutes.
Chairman.
Nobody's
Yeah. Mr. Chairman,
we can hear you now.
Hear me?
Senator Kennedy, go for it. Thank
you. Thank you, sir. Mr. Solomon, did Goldman Sachs underwrite Saudi Aramco's IPO?
We were one of the underwriters in Saudi Aramco's IPO. Yes, we were.
How much did you make?
I don't know off the top of my head what our underwriting fees are, but we can certainly come back to you. It would have been millions of dollars, but I don't know the precise number.
Okay, Mr. Moynihan, did Bank of America, was it one of the underwriters of the biggest oil and gas company in the world?
Sir, I don't know off the top of my head, but like Mr. Solomon, we'll get back to you with the details.
I think you were. I'll save you some time. Mr. Betts, Wells Fargo, were you one of the underwriters for Saudi Aramco?
I don't know the answer to the question, Senator.
You were. I'll save you some time. Ms. Fraser, how about Citigroup? Do you know?
Yes, we were one of the underwriters, sir.
How much did you make? Do you know?
I'm afraid I don't know how much that was, sir.
Okay. Mr. Dimon, was JPMorgan Chase one of the underwriters?
Yes, we were.
Okay. How about Mr. Gorman, Morgan Stanley?
Yes, we were.
Okay, thank you. I wanted to ask Mr. Dimon a question, if I could. I want to talk economics a second. Can we agree, Mr. Dimon, that firms ought to be taxed where they conduct their business and produce their profits as a general principle?
Well, global taxation is very complex, but yes, as a general principle.
Okay. How, and I'm not holding you responsible, Mr. Dimon, but how do you account for the fact that today about 63% of American multinationals' profits are booked in countries where they have only 15% of their employees?
I honestly don't know the number, so I can't comment on it.
Do you, and I'm not trying to put words in your mouth, but obviously what's happening is that American multinational companies are shifting their profits to so-called tax havens to minimize their taxes. Do you think that is a sound economic principle?
I do not, and I think that the last tax reform that was done actually stopped a lot of companies from doing that.
Yeah,
except,
I'm sorry, excuse me.
Except that I don't know what year you're looking at, but it did change substantially after 2017.
Well, it didn't change that substantially. I thought it did too, Mr. Dimon, but I looked it up today, right now. If you take American multinational companies and take a look at their taxes, 63% of their profits, the big boys and girls, have booked profits in tax havens where they only have 15% of their employees. Does that make sense to you, or is that?
I don't know the numbers. I'll take your word for it, and I don't know if it makes sense or not. I'd have to do a lot more analysis than that.
Okay. Let me ask you this. I don't mean just to dwell on you. Let me ask Ms. Fraser. Ms. Fraser, as you know, the Tax Cut and Jobs Act, we passed it in 2018, and we cut federal income tax from 38% to, I believe, 21%. Now, if you look at the Fortune 500 U.S. companies, the biggest companies in America, the top 500, of those that were profitable, what is their average tax rate?
I can only speak to our own tax rate, Senator. I'm afraid I don't know the numbers for other multinationals.
What is your tax rate?
Our tax rate is about 19% globally.
Okay, all right. I looked it up, and the average tax rate in 2018, that's when the Tax Cut and Jobs Act took effect. That was the first year. The average, and remember, the TCJA cut federal corporate tax rate from 35% to 21%. The average rate for the Fortune 500 companies that paid taxes was 11.3%. That surprised me. Does that surprise you?
Yes, I'm not familiar with the numbers, so it does surprise me.
And in the tax subsidies in the bill, I looked this up too. 25 companies claimed 1/2 of all of the tax subsidies in the bill. 5 companies claimed 22% of all of the tax subsidies in the bill. I didn't know this. Those 5 companies are Bank of America, JPMorgan Chase, Wells Fargo, Amazon, and Verizon. Does that surprise you?
I can only speak for my own company, sir.
I'm way over time. Did Citigroup take some of these subsidies?
I don't know. I will have to get back to you, sir.
Can I ask one more question, Mr. Chairman?
Sure.
Mr. Solomon, here's my question. Not will we, but should we, in your opinion, be using fossil fuels 20 years from now? Not will we, but in your opinion, should we?
There's no question we have a transition going on with respect to companies trying to find.
I know that, but I'm going to run out of time and our chairman's being real generous. Not will we, in your opinion, should we be using fossil fuels 20 years from now?
If the technology is available to allow us to use fewer fossil fuels and make the planet greener and therefore safer for everyone, and we can through those technologies have businesses and power and energy that allows us to operate our economy efficiently, yes, that's something we should strive for. Whether or not we'll get there 20 years from now, I can't predict.
Thank you, Mr. Chairman.
Thank you, Senator Kennedy. Senator Van Hollen is recognized for 5 minutes from Maryland.
Thank you, Mr. Chairman. And a number of you have been taking positive steps in a number of areas. And I want to see if we can use this hearing to encourage all of you and your banks to follow the best practices of some of the leaders. And I want to start with CDFIs and MDIs because all of you have made statements supportive of CDFIs and MDIs. We are hearing increasingly from those institutions that debt capital is much less useful to them, than equity capital. And I know in the case of Wells Fargo that you recently announced equity investments in Harbor Bank in Baltimore. I just want to ask each of you whether you have recently made equity investments in CDFIs or MDIs, and if you have it, the magnitude of that amount.
Speaking for JPMorgan, we've invested $70 million into 9 of the 18 black MDIs. CDIs are different because they don't have equity per se.
Right.
We at Bank of America, we've taken 5% common equity positions up to 5% in 17 MDIs, and we're in the process of going through the other ones to see if they need the money. And then on top of that, we have $120 million deposits with the MDIs that provide their capacity, and $1.8 billion in balances into the CDFIs, up from $1.5 billion a year and a half ago.
Okay.
At Wells Fargo, we've invested in 13 MDIs, almost $50 million, and have provided an extensive amount of financing to the CDFIs. We've committed $250 million of our Open for Business Fund, which was from the PPP fees. Over 150 million of that has already been distributed, and they in turn can lever that up.
Okay.
And at Citigroup, we've invested $50 million in equity into MDIs, and we work with MDIs and CDFIs across the country in different protege programs, providing technical support to them, marketing and other talent-based investments as well.
Okay, there's no easy standardized way for the public to determine how much you all are investing in terms of equity in MDIs or other investments, loans to CDFIs. Would any of you object to reporting to our committee on a regular basis? We can figure out what the interval would be as to where you are in making the kind of investments we're talking about. Any objections to that?
No objection.
Okay. So let me now turn quickly to the issue of stock buybacks. I know as we come to the end of this limitation period, many of you are talking about instituting stock buybacks. My question relates to wages paid. I think if you have the capacity and the profits to reward investors, I think at the very least we should also be making sure that all your employees are being fairly compensated. I know that Bank of America has pledged to raise their minimum hourly wage for all employees to $25 by the year 2025. I just want to ask the rest of you if you're willing to make that kind of commitment.
Well, I speak on behalf of Morgan Stanley. We're certainly going to take a look at it. I discovered last night for the first time we have one employee on a minimum wage, one employee of 70,000 of $7.50. I promise you that person's getting a raise. But the vast majority of our employees are well above the minimum wage.
No, I get that. I'm just looking to see whether or not people will make a commitment to raise the minimum wage to $25 an hour by the year 2025. If we could just go down the list, let me know if you're prepared to do that or get back to us on it.
We'll certainly prepared to look at it and get back to you.
Speaking for Goldman Sachs, Senator, we have relatively few employees who earn below $25 an hour today, but we're prepared to look at it and get back to you.
Thank you.
Speaking for Citigroup, similarly, we want to make sure that our people are paid fairly and competitively, and are happy to get back to you on that specific question.
Okay.
And speaking for JPMorgan, we take very good care of our employees with training and medical and pension and dental and healthcare and everything that they need. And we've done a pretty good job going our own way. We're not going to imitate anybody else, but we will be competitive.
Okay, well, listen, I just, again, we're in this period where people are talking about major stock buybacks. It seems to me this is also an opportunity not just to demonstrate to your shareholders your ability to reward their investments, but also to show your employees that you value their service. And I think the $25 by 2025 is a very reasonable target for all of your institutions. Let me turn and finally to the issue of climate change and investments. I want to commend Ms. Fraser on her decision soon after she took over to establish a new important coal policy, stating that in terms of realizing cities' net zero commitment by 2050, that they will exit all financing for coal power by 2030 in the OECD and EU, and by 2040 in the rest of the world. If I could just ask all of the other CEOs here today whether you'd be prepared to follow the lead that Citi CEO has made in terms of protecting our climate. Mr. Dimon, if we could start with you.
I think we need a mature conversation around climate. We need carbon tax. We need industry policy. It's not just about banks stopping financing. We're going to need oil and gas for a long time. It could be made a lot cleaner. So the conversation should be about how we're going to accomplish this in the right way. We can either accomplish reducing CO2 dramatically at no cost to having a healthy economy. If we do it the wrong way, we won't reduce CO2 going down because it'll simply move elsewhere, and we can damage the economy. So I just beg you, let's have a rational conversation, mature and thoughtful, how to go about it.
Well, Mr. Dimon, I've been trying as one to have a rational conversation for 15 years on this. And until recently, I've not heard the CEOs of major banks endorse the idea of a price on carbon. I know that's changed because of alternatives that are out there. So look, I think all of us have a part to play here. And I just want to ask your other colleagues up here if the kind of example that at least Citi made in this particular area, and I understand there's oil and gas and other areas, but with respect to coal, whether you're willing to make those kind of commitments.
And please be very brief in your response.
My response is I'd like to see what the alternative sources of energy are, which are essential to the economy. We're all trying to get away from coal dependency. Simple question is timing and alternatives, and the economy isn't held up as a result of it.
Senator, speak for Bank of America. Our policies are in the public domain on various types of coal and other types of things. But importantly, I think what we're all saying is we're here standing ready to help our clients make this transition and bring trillions of dollars of financing across this group in a way that helps those clients that produce energy do what they need to do, and they have announced their plans to do so. So I think that's critically important. That's the value of these big banks stepping up to help all the clients, large, medium, and small, make the transition.
I would echo the comments made by the other CEOs. We're working with our clients on the commission on this transition. We've made commitments around our own carbon emissions that we've published publicly, and we continue to be focused on wanting to have a very constructive conversation about how we can improve emissions going forward.
And for Wells Fargo, I agree with everything that's been said, and just stress it's all about assisting our clients on the transition that we know has to occur.
Thank you, Mr. Chairman. I hope everyone will support the American Jobs Plan, which is working together to get it done. Thank you.
Thanks, Senator Howell. Senator Scott of South Carolina is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate you recognizing me for the 5 minutes. Questions for the entire panel. I know that Senator Toomey had a question about capitalism versus stakeholder capitalism, and I'd add to that woke capitalism that seems to be running amok throughout the financial institutions of our country. It seems like you all are very comfortable picking winners and losers, specifically those who signed the letter in opposition to Georgia. That would be Bank of America, Citi, Wells Fargo, and Goldman Sachs, picking winners and losers in certain areas, especially in election law. I just want to understand your position on that very important law, because I, as a Southerner and African American who's voted in the South all my life, would hate any form of discrimination, anything that restricts voting rights. What part of the Georgia law restricted voting rights or was discriminatory? Any of the four that signed the letter.
Senator Scott, our company signed that letter based on the input from our ESG committee and our teammates about how they felt when the law came in. In our view, as a company, we believe that there ought to be a concerted effort to get the status standards that we can all agree to, because all of us, and including what you just said, is the access for people who are eligible to vote is paramount to having a great democracy. So it came out of our teammates, like we make a lot of these decisions, expressing grave concern. And so
let me just because I understood what you said, Mr. Moynihan, and I appreciate your comments, but my question is, what part of the law was discriminatory? What part of the law restricted? If you're actually increasing the number of days of early voting, if you're actually codifying a law drop boxes that were not a part of the law. If you were actually making it easier to vote but harder to cheat, what part of that law was discriminatory or restricted access? I've been studying the law, and that's one of the reasons why I asked that question, because from my perspective, and frankly, from the words on the paper, 20-pound paper, maybe not worth much, but those words are very powerful. It did not prevent anyone from voting, and frankly, it made it easier to vote earlier. And I just am dumbfounded by what the answer to the question was. Yes, we support capitalism, but the stakeholder capitalism or the woke capitalism seems to be running amok. And I say that because I can't find anyone who will answer the question, specifically giving me any examples or specific provisions of the law that we don't support. But at the same time, we will discriminate, it seems, against industries that we don't like. And that's where that stakeholder capitalism comes into play, because banks benefit from a number of explicit and implicit government protections and subsidies, all backed by U.S. taxpayers. So if it is legal and constitutionally protected, the Second Amendment, why would you refuse to bank companies that are in the industry? That I don't fully understand. So it seems like picking winners and losers in companies, and you're diving into choosing which laws you want to uphold and which laws you find offensive, but you can't articulate a position on why those things are offensive. It just seems confusing to me that one would say, I support capitalism, but I'm doing these things that are inconsistent with the statement that I support capitalism, and then I cannot articulate a single reason why I would not support, why I oppose the law in Georgia, or why I oppose funding or financing the oil industry or manufacturers of guns. I just find it to be disheartening as a former member of some of the institutions, as an account holder and a member of others, why it is that you all have taken such a strong, clear position, but can't or won't articulate the reason for that position. Well, Mr. Chairman, I thank you for the time, and have a good day.
Thank you, Senator Scott. Senator Warner from Virginia is recognized for 5 minutes.
Well, thank you, Mr. Chairman. I don't want to litigate the Georgia law with my my good friend Senator Scott from South Carolina, who we've worked on a lot of projects together. But I would start with the fact that the Georgia law that makes it illegal for someone to voluntarily give somebody a glass of water if you're waiting for hours and hours in line to vote runs counter to any kind of basic notion of fairness in American democracy. And, you know, there are a host of issues that I think why reasonable people, not just from civil rights organizations, but from business organizations across the round, have said, you know, in the era of 2021, cutting back on voting rights should not be how our country ought to be moving forward. I want to pick up on some of the questions that Senator Van Hollen said, and I've talked with most of you guys and know you. You know, I'm not, you know, I don't come in with a immediate bias against you, but I think we got to put up, you guys got to help put up more than you have. The wealth gap in this country should scare the hell out of all of us. How you guys have come through COVID, and you know, and I would argue part of that due to some of the Dodd-Frank reforms. Well capitalized, you've come through well. We lost 440,000 black businesses last year. We've seen huge swaths of Latino businesses go down. Lots of small businesses in Appalachia as well. One of the areas that we have, and I've talked with most of you about this, is Community Development Financial Institutes, CDFIs. The federal government finally, and I got to give former Secretary Mnuchin some credit for this, and people like Senator Scott, who was a partner on this, we put up $12 billion to both help CDFIs who lend to disenfranchised communities and low and moderate income communities. We put up $12 billion, $3 billion in grants, $9 billion in tier one capital. With almost all my conversations with you guys or your folks underneath, you've always had some kind of regulatory reason why you can't help CDFIs or can't do more. I'm going to need you to lean in on this issue going forward, not just with CDFIs. I see each of what you guys have I read about almost each of your institutions in many of the daily political rags that come out talking about what your institution is doing to help this advantage. What I don't see, though, is how do we get a quarterly update on those? I really think there is a moment in time right now where, whether it's working with CDFIs, whether it's a housing proposal that we've been working on, that I hope to get the chairman on board with as well, that would actually create a 20-year mortgage product for first-generation home buyers that would double the rate of wealth accumulation. And we've tried to price this with an interest rate subsidy that would, you could still make your $900 a month, mortgage payment on a 30-year note, you'd actually be getting it on a 20-year note. Trust me on the math on this. We're going to need you to lean in. We're going to need you to be much more participatory. And again, no disrespect to the great ads that run about what each of your institutions are doing, but we got to really, I think, up our game. And if there are regulatory changes that need to be able to make sure you're able to put some tier one capital into some of these institutions, if there are other tools, I'd love to work with you. But when we've seen the kind of disruption that takes place, that's taken place in our economy over the last year, I think you guys can definitely be part of the solution. I appreciate some of the programs you put up, but I am asking you on a generic basis to be willing to engage with me and others who care about trying to do something on a systemic basis, both on the wealth gap in this country and on the access to capital issues. As we showed with PPP, well-intentioned program, but the number of minority or women-owned businesses that got those first rounds because they didn't have prior banking relationships was huge. And I know my time's about up, but I will be back to all of you on an individual basis and want to continue this conversation. Last thing I want to raise, though, I think I've got, trying to look desperately for the clock here, I think I've got one, what has not been raised yet, I think for many of our colleagues, is the questions around cyber. The country finally saw with the Colonial Pipeline ransomware attack, what a challenge cyber can be. Think about the fact that the Russians were in 18,000 companies with SolarWinds attack. That, if the Russians had decided to launch that kind of attack through SolarWinds rather than the one-off ransomware, it would have brought our economy to an end. You guys in the financial sector have done a pretty good job, but we're going to need you again, both weighing in on, I believe, the need for mandatory reporting requirements so that public and private sector can sort through this. Finance sector has got some of that. And we're also going to need to, and I know many of you have started looking at this, look at the challenges around cryptocurrencies, because as we all know, that is the ransomware payment methodology of choice. We worked with all of you and Senator Brown did leadership, Senator Crapo, on the issue of the anti-money laundering and beneficial ownership bill we put in place last year, again, with your help. But we're going to need to partner together on this issue around crypto and the issue around cyber. And since I can't see, Sherry, is my time up?
Your time has expired. Your time has expired.
All right. Well, I will be back on both those, but thank you so much and look forward to visiting.
Thank you, Senator Warner. Thank you. Senator Shelby is recognized from Alabama for 5 minutes.
Thank you, Mr. Chairman. In recent years, activists and others have applied increasing pressure on our nation's largest banks to withhold offering banking services to certain types of businesses, including energy companies and gun manufacturers, among others, for political reasons. Many banks have responded by restricting credit and financing to those businesses. However, restricting access to capital for law-abiding companies results in higher costs for consumers and slower economic growth. My question to the panel, do you believe that political pressure or political motivation should influence a bank's decision to provide an entity access to capital? Or should a bank's decision be to approve or deny credit or services be based on an impartial and risk-based analysis? Mr. Dimon, I'll call on you.
I think most of the decisions we make are based upon a risk-based analysis and whether we think financing industry would be bad for our company or not, based upon the risk that we take on it. So we do have to make decisions, and all of us make different decisions. I think if the government passes a law, we follow the law.
Anybody else? No other comments? Well, I'm getting into another area too that we all better be concerned with, and that's the federal debt. The federal debt is currently over $28 trillion. The Congressional Budget Office projects debt to reach 102% of GDP by the end of this year, and 200%, yes, 200% of GDP by 2051 under current policy, unless there's changes. Are you concerned about the nation's growing federal debt, and what impact does an unsustainable level of debt have on our economy, as well on your banking system or our banking system? Mr. Dimon, you want to take that?
I don't want to, but I will.
I know that. I know that.
It's not an immediate concern that 102%. The country has enough wealth, enough income, but we do need to grow. We need rational policy. It will become an issue at one point when you have that dramatic growth sometime in 2030 to 2040. And so I think it's much better to try to deal with the issue today than is to do the issue down the road.
Mr. Gorman, are you still with us?
Yes, sir.
You got a feeling on that?
I don't like debt, so that's my primary feeling, and I don't like the debt when it gets over 100%. Listen, there are a lot of ways to solve this. You can reduce your spending, you can raise the taxes, or you can make corporations more profitable so they generate more taxes. And finding that balance, and that's the artful job our legislators have to help us work for. But yes, I'm concerned about it. I think there's a limit at which you can't rely upon the goodwill and largesse of the rest of the world to buy that debt, and that starts becoming a strategic issue for the country eventually. We're not there. Jamie's, in my opinion, dead right. But I wouldn't like to see this play out for another decade like this.
Could that have an impact on the concept of the U.S. as currency, as the #1 trading currency in the world? China's looking at all this.
I think it'll take a long time for that to happen. In general, when you see the world get in trouble, the US dollar becomes the flight of security where people go for safety and soundness. I think it's going to be a very long time. The US economy is nearly a $20 trillion economy and has a tremendous system of law. So I think that's a very long time away, but that doesn't forgive us taking any lack of discipline simply because, as I said, taking that for granted.
I know you guys aren't on the Fed, but price stability is important to all of us. That is one of the top mandates of central banks, is price stability, including our own. As we continue to pile on the debt and pay interest on the debt, pay nothing down, bring it down, it's got to have serious consequences in the road ahead. Mr. Gorman, you disagree?
Well, no, I agree with you. There's a level of debt that's unsustainable. Right now, though, what we need to do is get this economy back to its primacy, which it is on the way for, the low interest rates. Some of the fiscal stimulus is obviously helping that, but it's not an unlimited pool that we can draw on. It's a pool in the time of crisis.
Thank all of you.
Thank you, Senator Shelby. Senator Cortez Masto is recognized for 5 minutes from Nevada.
Chairman, thank you so much. Thank you to the panel members. I appreciate some of you have had the opportunity to talk with last couple of weeks. Thank you for taking the time. Let me start on an issue. I don't think it's been addressed yet, but foreclosure prevention. Let me ask you, there's about 2 million families who are at least 90 days delinquent on paying their mortgage. Millions of people's jobs disappeared overnight because of the pandemic, and that is more so in Nevada than anywhere in the country. At one point in time, we had the highest unemployment rate because of this pandemic. 4% of borrowers haven't been able to pay their mortgage. So for the bankers, what are you doing to work with them to keep them in their homes? Can you talk a little bit about what you're doing to address and help them when they are bumping up against foreclosure? And I don't know who wants to start. Wells Fargo?
Sure, Senator. So first of all, for the loans that we own, we have extended our moratoriums for foreclosures and evictions until the end of the year. We've also come out and supported publicly the CFPB's proposal to extend those moratoriums to apply to the whole industry, which for us would impact the loans that we service. And we certainly encourage other agencies to align to those policies. For those that are exiting forbearance, I would say one of the most important thing is we have very aggressive outreach through all communication channels. We have many modification programs that are available for customers in need. And what we need to do is be in as close contact to them before they get there as we possibly can. So we're doing it ourselves, and we're working with outside groups as well. And certainly if customers can resume payments, that's terrific. But if they can't resume them, we have a significant number of modification options to work with them.
Thank you. Mr. Moynihan.
Similar themes to Mr. Scharf's comments in terms of we contacted borrowers before they reached and worked to modify them to add on to the back of the loans, and there's a suspension of all foreclosures obviously through the end of the quarter here, but we work with those clients. The good news is, quite frankly, is the number of people who are still in our company is down dramatically, like by 90%. So we're working with the remaining ones. Many have cured, many were current, even though they asked for deferrals. And so we'll continue to work with every one of the clients to, as Mr. Dimon said earlier, taking someone through the foreclosure process is not what we want to. It is what we want to avoid at all costs.
Thank you. I appreciate that, Mr. Dimon.
I would just repeat what they said. We work. First of all, it is down about 90%. And we have several modification programs, and anyone who's getting close to foreclosure, we work where we own the loan. We don't necessarily control it. We don't own the loan. We work with them to try to find many programs to defer payments to help them through their tough time.
Well, I appreciate that. And really coming from Nevada, I was Attorney General at the time, working with many of you to address the foreclosure crisis we saw. We have opportunities and services in the state of Nevada that I hope you're also taking advantage of to help homeowners. But the good news, yes, they are down 90%, but there are still several homeowners in Nevada because of this pandemic that are still struggling and not back to work yet because of the nature of the hospitality and travel industry. So I'm hoping, please, that you are working with them and the various community organizations that are out there as well. Let me, I don't have much time, so let me jump to another issue that is important in my state. And I believe Senator Van Hollen talked a little bit about this, and I appreciate the investments your banks are making in minority depository institutions and community development financial institutions. However, I am aware that these entities exist unevenly across the nation. Nevada has no MDI headquartered in the state. There is only one certified CDFI in Nevada. In the past 30 years, we have only had 8 awards to a Nevada-based CDFI. We are the only state with a single-digit awards amount. And by contrast, 22 states with a smaller population than we have in Nevada have received many more CDFI awards. So my question to all of you is, how can you ensure and work to ensure that states and communities without a robust network of minority depository institutions and community development financial institutions benefit from the racial equity investments that we have made and that you have promised? And that's open to all of you. And I don't know if somebody wants to start. Ms. Fraser?
Yeah, I think one of the obvious areas that we've talked about is affordable housing, and the commitments in terms of closing the racial wealth gap. Housing is going to be a very important part of that. Seeing the PABS programs getting extended would make a big difference in making sure that that market and those programs can reach as many people as possible, and that would remove one of the constraints at the moment.
Anyone else?
I would comment, Senator, that I think your comments here that we need to work to strengthen this across the country are, is appropriate. They are uneven across the country. We continue to work to partner broadly with CDFIs and in our new initiative where we've committed $10 billion to close the racial wealth gap for Black women in this country. We're making investments, across the United States through all 50 states, but we'd be happy to work with you to find ways that we could have a larger benefit.
Thank you. I know my time is up. I will submit the rest of the questions for the record. Thank you, everyone. Thank you, Mr. Chair.
Thanks, Senator Cortez Masto. Senator Hagerty from Tennessee is recognized for 5 minutes.
Chairman Brown, Ranking Member Toomey, thank you for holding this hearing. During the pandemic, our financial sector, including large banks, community banks, credit unions, farm credit lenders, fintechs, and all of their employees, showed why the private sector is often much more efficient than the government in solving bipartisan problems. For example, the PPP we've talked about mobilized our nation's private lenders last year to distribute over $300 billion to save small businesses, and they did it in just 14 days. Compare that with the 4+ months that the Biden administration has taken on the shuttered venue operators grant fund. They still haven't distributed a dime to save struggling small businesses in my home state of Tennessee. America's financial sector is the envy of the world. It's the most robust, it's the most efficient, it delivers the greatest liquidity and financing at the lowest cost of capital anywhere. But our financial sector won't remain the envy of the world if American businesses and employees have to pass a political litmus test in order to secure the capital necessary for growth. We didn't develop the greatest capital markets and financial system in the world by letting extreme social ideologies dictate business decisions. What we're seeing today is the debanking of financially sound, legal American businesses that support millions of American workers. This is happening simply because these companies are in industries that are politically unfashionable in some places. This debanking will either force those companies and their jobs to other countries, or worse, it will put those American companies and their workers permanently out of business. In the long run, this is going to be very detrimental to American workers, American businesses, and our markets. Private corporations that you all run can make their own decisions, but you should expect heavy scrutiny when leaders use politics as the driver for business decisions that may harm American businesses and American workers. I hope that our largest financial institutions will set the standard for non-discriminatory business practices and keep politics out of finance. My first question, I would like to turn to Ms. Fraser. I want to follow up on something that Senator Warner started on. You and I have actually talked about this in the past, but I want to come back to the cyber attack on SolarWinds, the ransomware attacks on our Colonial Pipeline, and also one of the largest U.S. insurance companies recently had a cyber attack. These are highly serious cybersecurity vulnerabilities that have been exposed in our infrastructure. We're also seeing a lot of fraud and hacking in the cryptocurrency area. You and I talked about that as well a few months ago. And Citi is a very global bank. It's got operations and customer interactions increasingly moving into the digital space. I want to be sure that all of you are laser focused on these risks. Ms. Fraser, what are some of the biggest cybersecurity risks that you're seeing around the globe? And second, how can we improve government coordination with the private sector to address this?
Oh, thank you for the question. I think it's one that keeps all of us up at night as one of the greatest risks to the financial system right now. This can be perpetrated by government actors, by organized crime, and a whole variety of institutions and individuals trying to cause some harm. I think it's very critical that we continue sharing intelligence about what is going on, making sure that there's plenty of forums in which we can share intelligence about what's happening and why, so that we're able to protect our institutions, that we continue making major investments. Our own firm invests almost close to $1 billion a year in cyber protection, and that the intelligence that the U.S. has is something that we use to defend against attacks on American companies, and the financial institution worldwide is absolutely critical.
Well, as Senator Warner mentioned, and I do as well, we share great concerns about the vulnerability of our financial services system on cybersecurity. And we also are watching very closely what's happening in the cryptocurrency markets. And as Senator Warner said, he wants to work with all of you in addressing this. I do as well. So you've got bipartisan support here in the United States Senate to address this significant problem. And I think with our largest banks, we can make significant progress and set the standard, frankly, for our entire financial system. So I look forward to working with all of you in this regard. Mr. Chairman, thank you. Mr. Chairman, I yield back my.
Yeah, thank you. The things froze. Sorry about that. Thank you, Senator Haggerty. Senator Smith's recognized from Minnesota for 5 minutes.
Thank you, Mr. Chair, and thanks to all of you for being with us today. I appreciate it. I'd like to dive in a little bit on this issue of climate risk disclosure. So in February, when Fed Chair Jay Powell testified before our committee in response to a question that I asked, he said, quote, "Clearly we ought to be going to more of a template and more standardized," unquote, a template for climate risk disclosure. And, you know, for most people, what this would mean is an SEC rule requiring public companies to disclose their climate-related risk in some sort of a standard and comparable way so that people can see across, see what that risk is across different organizations. And I know that your firms consistently assess risk, including climate risk. So let me just ask each one of you, if you would, yes or no, and if no, why not? Do you think that the SEC should issue a rule setting out some sort of standardized climate risk disclosure framework? And I'll start with Mr. Scharf.
Senator, I mean, first of all, I'd say I'm proud of the steps that we're taking on disclosure. I actually don't know enough about different industries to know whether that is the best approach or not. We've been very focused on developing our own sets of disclosures and understanding how we're going to measure different aspects. And certainly something we can think more about and come back and talk to you about.
Okay, well, I'll come back to that. Mr. Solomon.
Yes, I appreciate the question, Senator, and it's something that that we would be open to, but I think it's very important that you're very specific about the form it takes, and in particular, the consistency across regimes. This consistency issue is, I think, a very, very big issue. That'll be very, very important. We'd be happy to discuss that further with you.
I agree with, I think that's right. That the point here is that you would have some sort of assessment of what material is, and that can be clear so that it's not just everybody picking their own idea of what material is. Ms. Fraser.
Thank you very much. We voluntarily made a large amount of disclosures on this. I defer to the SEC as to what they believe the details of it should be. And as Mr. Solomon said, there's great benefit from consistency. I think we also have to recognize there isn't a lot of data out yet. And so whatever systems put in will evolve over time as we get better quality data and better understanding of this going forward.
But having a standardized rule so that it can be comparable across platforms makes sense to you?
If the consistency element is critical, yes.
Mr. Dimon?
Well, you have to put this in perspective a little bit because we make a tremendous amount of disclosures already in ESG, so we're not against it. We're in favor of that kind of thing. And very often we're asked to make more disclosures. Our 10K is already 400 pages long, and most people don't read that. So yeah, I'm in favor of it, but you got to be very, very thoughtful about what it is, what you're trying to accomplish, and how it is not just done for banks, but it's done for other critical industries in the right way to accomplish the goals you actually want to have.
Right. But the point that there would be something that would be standard and consistent that would allow people to disclose consistently would make sense to you.
Yes, but you wouldn't be able to do that immediately.
Okay. Okay. In the interest of time, I want to just skip to the one other thing that I'd really like to talk about, because I think it gets to this question that has been coming up around from some of my colleagues on the other side about this so-called wokeism. So here we go. Last year, the Department of Labor issued a rule under the Trump administration Department of Labor that sharply limited the circumstances in which pensions, 401k plans, could consider environmental or social or governance factors in their investment decisions, which meant that in effect, most 401k plans wouldn't even be able to offer workers the option of keeping their investments away from companies that discriminate against their workers or support polluting industries, for example. So to me, this seemed like a politically motivated rule, and it had also imposed a difficult, unnecessary burden on plans. I have introduced legislation that would undo this Trump rule. In fact, the Biden administration has moved forward administratively on this. My question to you, and I will just maybe go to the two that I didn't have a chance to hear from before. Do you think that the Trump administration was right to repeal that rule, or do you think it is reasonable to have a standard for allowing plans to consider ESG factors if that's what their investors are asking for? Mr. Moynihan?
Well, Senator Smith, I'll tie this back to the last question, which is public companies have worked together with the big four accounting firms to cut up a set of metrics and standards that 80 plus companies have signed on to. The key is to standardize this, and the key is to bring these metrics together, and that will allow people to be judged across industries and across investments on ESG factors. That is out there. We've disclosed it. 80 other companies have signed up to disclose it. And I think that feeds into the question with a demand of the investors to understand these factors, a consistent, straightforward, simplified set of disclosures that could cross industries is needed. And that would then not require rules about what to think about, because the investors could actually see and make choices.
Thank you. Mr. Chair, I know I'm out of time. I just want to observe that I just disagree with my Republican colleagues on this broader issue. This isn't about being woke. This is about providing individual investors and the individual investors with the information that they want in a clear and understandable way. And I think that that is a good thing for stability, and good thing for the markets, and good thing for people. Thank you.
Thank you, Senator Smith. Senator Kramer is recognized from North Dakota for 5 minutes.
Thank you, Mr. Chairman, and thank you to our panel. Special thanks to the 5 of you that reached out and that I was able to meet with in the last few weeks. Mr. Gorman, I'm looking forward to doing that in the future with you. I found the meetings to be productive, frank, and even encouraging. So thank you all for that. You've answered a lot of questions today about your ESG policies. I think there's been some clarification. I'm gonna try to ask some real specific questions that might help inform me a little more. First question I'd have for all of you is: do you think U.S. energy investment, or do you think that reliable energy, reliable electricity is important to the United States economy? And you only have to answer if you say no. Is reliable energy important to our economy? So let me ask this. Do you think global energy demand is going down? Does anybody think global energy demand is going down? Okay. Let me ask this specific question to you, Ms. Fraser. Does Citigroup have a coal reduction policy, or do you have a carbon reduction policy?
We have a policy which is reflective of a risk-based assessment on the coal sector. We see declining demand. We also take into account reputation and other risk factors when we make a decision as to where we're going to be financing and not. We have a focus on helping them support our clients decarbonize, but are very mindful that there's a very important balance here between energy policy and the economy, and making sure that that transition achieves both goals.
Well, I always like hearing the word transition. I believe that the United States of America is the solution in the transition factor. I'd submit to you that global demand is increasing, and that many of the policies that my friends on the left want to promote simply transfer their climate guilt to other countries. And I just would submit that investing in the fossil energy sector in the United States of America is the single best way to lower carbon emissions globally, while working with the innovators in those industries to reduce it. So words matter. So when a policy says we won't invest anymore in anybody that uses more than 5% coal generated electricity. I would say, well, what if that coal generated electricity actually has zero emissions, 10 years from now because of technology? So I just want you to know that the words actually do matter as you're learning today. I also know that the voices in your guys' ears are the left. It is the woke crowd, or it's the environmental extremist crowd that's speaking through proxies or speaking through their institutional investors. And I just want you to know that I'm going to be the voice on, another voice in your ear, pointing out some other things. Let me ask. I'll ask any one of you, I guess, can answer this. When you consider, for example, the risk of investing in a large server farm, let's just say Amazon comes to you and says, we're going to build a large server farm in a city where you have a big bank, and we'd like to borrow, $300 million for that server farm. Do you consider whether or not that server farm is going to have 24-hour a day, 7-day a week electricity, redundant and reliable electricity? Mr. Solomon, would that be a consideration in an investment like that?
I think, Senator, I appreciate the question. I think when we look at any transaction with any company, the people that evaluate credit and risk think about a broad array of risks. And so in looking at something like that, certainly they'd be thinking about power source and how that worked in terms of making a credit decision. It would be one of many, many factors that would be considered. The biggest factor, if you're doing something for Amazon, would simply be the overriding credit of Amazon as, the largest company, one of the largest companies in the United States.
Certainly, and I use Amazon because they are large and because they do have large server farms, and server farms require a lot of electricity, but they can't have the lights go out. And regardless of what the fuel source is, I would submit to you that you just can't have the lights go out. And my point is maybe Mr. Dimon, you could wrap up with me on this. My point is, I think we have this tendency suddenly in our culture today, for whatever reason, to think that energy is an industry sector over here, and we can just sort of set that aside over there, and just manufacturing, transportation, infrastructure, the tech industry, all that we can still deal with over here. And we simply cannot. And so here's my pledge to you all. I want to help you be part of the solution to this transition that we talk about of lower emissions. And I would say that's going to involve a lot of investment in the United States of America's energy sector, including fossil energy.
Thank you, Senator Kramer. Senator Tester from Montana is recognized for 5 minutes.
Yeah, thank you, Chairman Brown. I want to thank all the folks that are here as witnesses today. I want to talk about housing from a little bit different angle. Okay, I've always talked about availability and affordability. It is a problem. It continues to be a problem. It was a problem before the pandemic. It is a bigger problem now because we're seeing prices go up. We're seeing people paying premium prices, sight unseen, cash on the barrelhead, all that stuff to buy a house. Some of them are going through you guys to buy it, but there's one thing for certain. Demand is outpacing supply, and the result of that is we're seeing housing prices in states like Montana go through the roof. I mean, we're talking 20, 30, 40, even 50% increases over the last 15 months. So what I would like to know is this a bubble? Are you folks concerned about this? And if it is a bubble and that bubble pops, and I was around here in 2009, 8, whenever it popped last time, and there was a lot of uncertainty. So the question is, if it's a bubble, and if that bubble pops, are you guys in good enough shape to handle that? And I assume you're going to say yes. Tell me why. And if you say no, thank God for your honesty. So I don't know. I think we'll start with Mr. Scharf, and we'll just go right down the line.
Well, I think the answer to the first part of your question is, you have to look market by market. I think our assessment when we look at the markets which have seen material appreciation are because changes in trends. As far as how we feel, we have been, I think, relatively conservative in terms of how we have underwritten and how we continue to underwrite. And between our loan loss reserves and the amount of capital that we have, we think we will be just fine.
Okay, Mr. Solomon?
Unlike a number of the banks here, we have a very, very small, tiny mortgage lending book. So, broadly speaking, I think you do have to look at what's going on from a monetary fiscal policy perspective. how it's accelerating asset prices, how that's affecting prices of homes as we go forward. But in terms of our institution, it's a very, very small risk in our business platform.
But if we were to have a bubble of pop that would have impacts on you, whether you have a small part of it or not, and do you see it as a bubble?
I don't see it as a bubble, but I think there's a lot going on that is inflating asset prices, and I think we have to continue to watch asset prices, watch inflation, watch monetary and fiscal policy, and hopefully the Fed will get the right balance. And if they do get the right balance, then it will turn out that there was not a bubble. If we don't get the balance right, there will be issues. And of course, there will be second or tertiary impacts to all this that will affect all these institutions, but we're very well capitalized and I think very well positioned as an industry to withstand that and continue to participate constructively at that time.
Okay, Ms. Fraser?
I think similar to Mr. Solomon, this has to be monitored very closely, and I think it's too soon to call whether it is or not. Housing is absolutely critical. We can support it through mortgages as well as affordable housing finance, and many of us have talked about the importance of support in that arena. We are speaking for Citigroup, where we have a lot of reserves on our balance sheet, and we believe that we're in strong financial health, and we're hoping that with the recovery that those reserves will not be required.
Okay, Mr. Dimon.
Senator, to give you a little comfort, while it is a little bit of a bubble in housing prices, stuff like that, unlike 08 and 09, there was tremendous leverage and bad mortgage underwriting. Here, there's not much leverage and much better mortgage underwriting, so it wouldn't have the same effect on the financial system as we had last time. And I think all these banks, we have our capital runneth over. We have enough capital to withstand multiple crises. As we did in 08, as we did in the pandemic. We run 120 stress tests a week, some of them far more severe than the Federal Reserve severe adverse test, and we can handle all of that rather easily.
Thank you, Mr. Moynihan.
The last point that Mr. Dimon made is a key point, that the stress test, which assumes housing prices drop by 60%, I think the last one was, assume there's a downfall in housing. You can see the banks all pass the stress test with that. Secondly, I think Mr. Scharf's points about the underwriting has been much better done, frankly, in the last 15 years since the last housing crisis. And so the amount of leverage at the consumer level is much different. So I think that portends that they'd be able to make it through better also.
Thank you. Finally, Mr. Gorman.
Not a bubble nationally. Certainly some suburbs look very frothy. The banks are extremely well capitalized to absorb should this be a downturn. And we're in, as my colleague said, in a very different position from 10 years ago.
Okay. Thank you all very much. Thank you, Mr. Chairman.
Thank you, Senator Tester. Senator Daines, also from Montana, is recognized for 5 minutes.
All right, Mr. Chairman, thank you. And a big thank you to our witnesses for being here. And I got to say, thank you for helping our economy recover over the past 15 months. A heartfelt thank you. Shifting gears, I recently read a quote who was actually from the ACLU. And he was referring to Harvard when he said this, when he defined diversity. And he says, diversity at Harvard is where everybody looks different but thinks alike. That stuck out to me, and I think it rings true and crosses over several sectors of our society, including banking. Mr. Scharf, what non-economic criteria would Wells Fargo take into account when making loans? And I also think of this in the context of the shareholders' personal or political beliefs taking into account.
Well, Senator, thank you for the question. I think our approach to underwriting starts with a risk-based approach in its entirety. And so we look at all of the risks that something could pose, and we look at the returns relative to the risk that we take. And so that could be credit risk, it could be market risk, it could be operational risk, it could be reputation risk. And we also think about our shareholders and what their points of view are over time, not for a specific credit per se, but about their views on just our institution.
So I was struck as I've looked at what happened, the situation with Core Civic, in terms of what criteria was applied when you made a decision in 2019 to stop lending to Core Civic, and really more specifically, was that response driven by any reports or shareholder activist proposals?
Senator, that decision was made before I arrived at the company, so I really can't speak to it.
Okay, I'll move on to Mr. Moynihan. In the Bank of America's 2021 proxy statement, a shareholder proposal stated, and I quote, "Bank of America's charitable contributions are not fully aligned with its public statements. Bank of America has donated to police foundations in New York, Atlanta, and Los Angeles. In response to pressure from shareholders and the fear of escalating shareholder activism, have either you or Bank of America halted or reduced giving to police foundations?"
Senator, thanks for the question. We haven't changed the way we gave in the past based on any shareholder resolution that I'm aware of.
And specifically to anything law enforcement or police foundations?
Exactly.
Yeah, thank you. Follow up to that, how do your ESG initiatives and your guidelines impact your client selection and lending criteria?
Well, I think it's similar to what Mr. Scharf was saying. You have a series of risks that you're assessing in any transaction, and those risks are off the spreadsheet, off the the balance sheet and income statement, off the market opportunity, off the brand of the underlying company, and that's all taken into account by our team as they look at client selection in each individual case. Those committees have business representatives, risk representatives, legal representatives, compliance representatives from all over the company to make the decision.
In the looking through your 2020 proxy statement, you discussed commitment to achieve net zero greenhouse gas emissions in your financing activities. Do you anticipate refusing to provide banking services to any oil, gas, coal farms or ranchers that would have emissions?
No, Senator. That commitment, you've heard us all talk about it earlier. These commitments, our clients have committed transitions, and our job is to help them finance that transition because that's what banks do. And just in 2020 alone, we did about $60 billion in environmental financing to help clients make the transition. So we're working with the oil companies, with gas companies and others to help them finance the transition, including using our purchase power to help make that happen. So, for example, with the providers of electricity to us in the Carolinas, we help them give the kind of contracts a company like ours can give us from a major player to help them build a solar facility to help them, and they can sell that to other people. So we can do it through how we underwrite, how we support those clients making transition, and also how we use our purchasing services for electricity in particular to help a utility make a change.
Great, thank you. Mr. Dimon, could you explain to what extent, as you look at your risk models, you factor in any controversy risk, and how that might play into an assessment of perhaps lending to whether it's a firearms manufacturer or a natural gas project?
Yeah, so a little bit, but not as much as people think. So when it comes to energy, it's really carbon intensity we look at. And we've been working with the auto and oil and gas companies, all of whom are trying to get their carbon intensity down. I think we'll actually quite successfully, the American public will be happy with it. When we look at risk away from just financial risk, it's usually legal and regulatory. And it's usually the cost of underwriting and doing due diligence that we look at, which might say there's no reason we're going to do A, B, or C because the legal and regulatory cost down the road would just be too high.
Great. Thank you. I'm out of time. Thanks for being here today. Appreciate it.
Thank you, Senator Daines. Senator Sinema from Arizona is recognized for 5 minutes.
Well, thank you, Mr. Chairman, and thank you to our witnesses for being here today. Each of these financial institutions played an outsized role in the economic response to COVID-19. Ms. Fraser, it's good to see you again. Let's talk about the Paycheck Protection Program. We effectively transformed the traditional loan origination process into what we hoped would be fast emergency cash flow for small businesses across the country. We saw that the PPP saved countless jobs, but we're also seeing concerning instances of fraud and abuse that need to be held to account. Defrauding American taxpayers is unacceptable, and strong oversight and investigations into Paycheck Protection Program fraud must continue. How do you think Citi and other banks did in implementing the PPP and excluding the technical issues with the SBA? What was the biggest challenge that banks faced in terms of execution?
Yes, I think the goal of all of us is certainly at Citigroup was to get as much money into the hands of those who needed it as quickly as possible. So some of the challenges were building out digital platforms to be able to get to be able to disperse and facilitate the applications, and similarly for the forgiveness programs that are currently underway. The biggest challenge was speed, getting that money into the right people's hands and making sure that we were doing so in a way that wasn't allowing fraud into the system and was protecting the intent of the tax holders' money in supporting people who needed it the most.
Thank you. And do you believe that repurposing the loan origination process is the optimal solution to help small businesses in a future pandemic? Or knowing what we know now, do you think we could design something better?
I certainly think that it will be a well worthwhile investment to make sure that we do have a technology platform at the SBA or any of the other relevant institutions helping this to be able to disperse money as effectively as possible. There were many lessons learned on these last couple of rounds, and they need to be applied and investments made in the technology systems for sure, Senator.
Thank you. Next, I'll turn to Mr. Solomon. It's good to speak with you again. I want to build off of Ms. Fraser's observations and think about the future pandemic response. This pandemic really taught us how fragile the economy can be if the right shock comes along. For the first times in our lifetimes last spring, businesses, both large and small, were staring into the abyss. And we had a Congress that was willing to act, but government lacked an effective mechanism to deliver economic relief quickly to everyone. Now, our office helped thousands of Arizonans who struggled to navigate government bureaucracy to access unemployment insurance, PPP loans, stimulus checks, and we're still helping some of those businesses today. Now, we chose as a country to move quickly and move together as a Congress. I'm glad we took action, but we owe it to ourselves to take a hard look at the pandemic response and assess what we did, what we spent, and whether or not it worked as intended. Now, it can be tempting to pretend that another pandemic isn't possible and that this is a problem better left to the next generation. But I think we owe it to the people of this country to have a better plan in place for the next time this happens, which could be sooner than we think. And that's why my team and I are starting a bipartisan working group on risk sharing and pandemics. And right now we're working with a diverse group of stakeholders, think tanks, and other Senate offices to identify a smarter and more fiscally responsible solution for businesses that leverages the power of insurance in the event of a pandemic. What do you think about this type of public-private partnership? And do you believe it would promote growth and make our economy more resilient?
So I appreciate the question, Senator, and I think it's great that you're advocating for us all thinking about the lessons we've learned and thinking about preparedness. Certainly, there have been many pandemics before, and we certainly will see pandemics in the future. As you think about these issues, I think you need to come up with an appropriate risk-based system that can price and distribute that insurance appropriately. We'd certainly support the idea of thinking about this and finding ways that the private sector can partner with you to potentially allow us to be better planned and better prepared from an insurance perspective. And we'd be delighted to work with you and your staff.
Well, thank you. We have a lot of businesses who couldn't access the relief they needed during this crisis. Some were too big, some were too small. Others just simply couldn't navigate the bureaucracy. And many of these businesses failed. Many of these were Main Street businesses. And the bankruptcies and defaults during the pandemic threatened nearly $2 trillion in commercial real estate loans held largely by big banks. This threat forced some banks to set aside capital to cover potential loan losses, and it tightened credit across the board when businesses need it most. So, Mr. Solomon, do you believe that averting some of these bankruptcies and defaults through a risk-sharing mechanism like the one our group is contemplating would reduce losses and make credit more available to businesses in these tough economic times?
Well, again, I think it's very, very important to set up an appropriate risk-based structure. I think these are complex issues, but I think it's something we should focus on and think about. We'd be delighted to spend some time bringing resources to bear in that discussion.
I appreciate that. Mr. Chairman, I see my time's expired. I yield back and thank you.
Thank you, Senator Sinema. Senator Ossoff from Georgia is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to our witnesses today. Ms. Fraser, The American Society of Civil Engineers has rated the state of U.S. infrastructure at a C- and estimated that the capital expenditure necessary to close the gap to get to a B level, which they define as a state of good repair, is approximately $2.6 trillion. Now, not all of that investment has to be public investment. So my question for you is twofold. First, do you agree that having state-of-the-art, world-class infrastructure in the United States is essential not just to quality of life, but also to economic competitiveness and sustained growth? And how can Congress take action to make it easier for private sector entities with significant capital at their disposal to invest in necessary infrastructure improvements and construction?
Oh, thank you very much indeed, Senator. It's a really important question. Yes, I do agree that America having a far stronger infrastructure than it has today will be important, both in terms of competitiveness of the country, as well as an important source of jobs and growth going forward. The public-private partnership has been shown to be a very successful one in this area, where the government can step in and provide credits and other areas where there are gaps in a capital structure or help absorb some of the risks in it to enable new investors to come in and participate in the investments is going to be a very important area. And it's one I think I can speak for myself. We would be delighted to work with your office on going forward.
Thank you, Ms. Fraser. And would you similarly commit to working with this committee and my office to explore mechanisms that could make it easier for private capital to support the development of clean energy production capacity here in the United States? I know that your bank has made some significant commitments in terms of emission reduction.
Yes, we would be delighted to do so. I think the development, as we've heard today, of new technologies in sequestration or in carbon capture and others will be absolutely essential in the transition ahead. We would be delighted to do so.
Thank you. I look forward to those discussions. Mr. Solomon, I'd like now to turn to you. Could you please lend your perspective? What are the impediments and what are the opportunities for improvement to public policy to unlock more private capital for capital investments, improvements, construction of necessary infrastructure in the United States?
So I appreciate the question, Senator, and I think that it's important for us to try to unleash a lot of the private capital that exists or is earmarked toward infrastructure. I think there's over $200 billion of private capital earmarked for investment in infrastructure in this country. I think that finding ways to collaborate from a public-private partnership perspective has always been a successful path to take. I think there are things that we can do to potentially expand activities by making certain tax-exempt financing easier, potentially for rural broadband or housing infrastructure more broadly. I think those are areas that would be worth exploring.
Thank you, Mr. Solomon. I appreciate that. Mr. Dimon, I'd like to offer you the opportunity to respond to the same question, perhaps comment on the statements made by some of your colleagues.
Yeah, no, I agree with everything they said. And I would just add that infrastructure is critical, but I would beg you, the Senate, to focus on the output, not the input. There's too much time is spent on how much money we're going to spend on stuff. Too little time is spent on who's responsible, what's it going to cost, what is it worth, and also you need to fix regulations. I've given this example many times. You can look at these examples around the country. To rebuild a broken bridge between New Jersey and Staten Island, it took 10 years to get the 49 permits, which they had to get sequentially. You know, if it's going to take 10 years to rebuild a broken bridge, to get those permits, that the cost is higher, the risk is higher, private capital will not come in. And so you have to do those things together and, you know, constantly about the outputs, how many bridges, and then you'll get full support of everybody if we know it's going to be effectively spent. This country has spent lots of money completely ineffectively, and that would be a very bad idea.
Thank you, Mr. Dimon. Appreciate that contribution to the discussion. Mr. Moynihan, when we discuss some of the potential investments in infrastructure, for example, transit and transportation, clean energy, the energy grid, can you comment as well, please, on the opportunities and the challenges faced by private capital interested in supporting these vital national
Well, I think my colleagues have outlined a lot of the questions and issues, so to speak. There is just a lot of money ready to be invested. It'll take some effort on the permitting and other types of process to speed those projects along, but the money is there, and in fact, it's being invested as we speak. So I think I'd encourage a holistic view of this, from the amount of money that the government can help to move projects faster, the amount of money that the private sector has, and then importantly, the atmosphere on getting the project done, which is required to speed these things along.
Thank you all. Thank you, Mr. Chairman. I yield.
Thank you, Senator Ossoff. Senator Warnock from Georgia is recognized for 5 minutes.
Thank you so very much, Mr. Chairman. The country's biggest banks often set the pace for the rest of our economy, which is why I think it's important for banks, especially the biggest banks, to be good corporate citizens and to model good corporate behavior that benefits our broader community. I think, frankly, that's good for capitalism. That means you use your power to stand up for climate so that we have sustainable solutions, for our democracy, which creates the context for capitalism, for voting rights, for the least among us, including our brothers and sisters who face discrimination at the hands of our financial system and sometimes at the hands of our own government. And I'll just give one example. This past weekend, I was honored to be in Fort Valley, Georgia, along with the Agriculture Secretary Vilsack, for the rollout of the Debt Relief for Socially Disadvantaged Farmers program I fought to secure in the American Rescue Plan. Leading up to this event, honestly, I was quite disappointed to see this letter from several banking associations, including the American Bankers Association, an organization that all of your banks belong to, sent to the USDA. The letter actually complained that the relief program will cut into the bank's profits and argued that USDA should deviate from its congressional mandate to quickly implement the debt relief for eligible farmers who have faced decades of discrimination at the hands of the federal government. The letter suggested that somehow paying the prepayment penalty, which the USDA has already indicated it will pay, somehow that's not enough. And so I want to give each of you a chance to clear the air and distance yourselves and your banks from the ABA's concerning position. I'd like, one by one, if you would tell me, do you agree with the position taken in the letter, which would either hinder the relief or slow down the relief farmers would receive, or somehow suggest that the American taxpayers ought to do more than pay the prepayment penalty, which they're already doing? I'd like a brief yes or no answer, since I have a few more questions and limited time. Mr. Scharf?
Senator,
do you agree with the letter?
This is not an issue that we're involved in.
Pardon?
This is not an issue that we're involved in.
Do you agree with the letter, yes or no?
Again, this is not our. I've not read the letter, but it's not our issue, and we are a significant lender in the agricultural sector.
Mr. Solomon, do you agree with the letter? You like Mr. Scharf, your bank is also a member of the ABA.
So it's not an issue we're involved in, Senator. We don't always agree with the ABA. We've made a $130 million commitment to Hope Enterprise Corp, which is a significant depository institution in that area, but it's not an issue we're involved in specifically.
Ms. Fraser?
I think similar to my colleagues, Senator, I'm afraid I haven't read the letter. This is not an area that we are involved in. And as Mr. Solomon said, we don't agree with everything that the
Do you agree with this? Do you agree with that letter?
I'm afraid I haven't read the letter, so I don't know, sir.
Mr. Dimon, do you agree with the letter? Do you
fundamentally
that we should deviate from the congressional mandate and slow walk the payments that these farmers have been waiting on, or that the American taxpayers ought to do more than pay the prepayment penalty, which is part of the provisions of the law?
We did not fundamentally agree with the letter, and that was really our smaller bank brethrens. They do have some legitimate issue, but we did not fundamentally agree with the letter.
Okay, thank you. Mr. Moynihan.
Similarly, It's not an issue that our company was involved in, and I think it's an issue for the smaller banks, and I think it would be better to hear their point of view on it, but it's not an issue we engaged in or had anything to do with.
Mr. Gorman?
I haven't read the letter. It's not our issue, but I certainly don't agree with discriminating against farmers.
All right, thank you so much. Listen, I want to touch on a different issue in my remaining time. As we know, the financial crisis, while painful for everyone, has been particularly devastating for Black and brown homeowners. Some of you may have seen recent media reports about Black and brown homeowners receiving valuations significantly undervalued compared to white homeowners. One story in Indianapolis is particularly heartbreaking. Mr. Scharf and Mr. Dimon, as the top two bank mortgage lenders in this country, when you consider the wealth gap and how that's exacerbated in the real estate market, where most people have most of their wealth in their homes, will you each commit your banks to take action to help address racial disparities within the home appraisals market?
Absolutely.
I agree, Senator.
Thank you so much. I think this is a critical issue, and it's the reason I'm introducing the Real Estate Valuation Fairness and Improvement Act along with Senator Klobuchar to help remedy these appraisal disparities which increase the racial wealth gap. Thank you so much.
Thank you, Senator Warnock. We're reaching the end of the hearing. Senator Toomey would like some closing remarks, as I will, and we will have you out as mostly promised by 1 o'clock. So thank you, Senator Toomey.
Thank you, Mr. Chairman, and thank you very much to all of our witnesses for attending and for your patience for being here. Listen, I can't help but reflect on the fact that I think this hearing really demonstrated the very points that I was trying to make in my opening statement. What we just saw over the course of the morning was where stakeholder capitalism takes you. This morning, you all have been criticized for distributing capital to the owners of the institutions when you buy back stocks. You've been criticized for charging fees for providing financial services. You've been criticized for not supporting efforts to unionize your workforce. You've been criticized for serving lawful businesses like fossil energy companies. And my point is that if you concede the premise that shareholders don't rank above other stakeholders, then it's hard to explain in principle why those criticisms are wrong. I think there is a principle to explain why they're wrong, and that is that your primary responsibility is to maximize value for your shareholders. And I got to point out, when you were asked to endorse a proposal for government-imposed price controls on credit, you didn't object. And in fact, some of you seem to express support, at least in principle. And this is an anti-market proposal. And nobody stepped up and defended this fundamental principle of capitalism, that we use markets to discover prices, not government edicts. So again, I just want to close by urging you, please defend the capitalist system that has worked so well for so many for so long. Thank you, Mr. Chairman.
Thank you, Senator Toomey. Again, thank you all for your patience in being here. I look forward to doing this more in the future. We've heard a lot today about how much you value your employees, and that yet not one of you agreed to remain neutral if your workers want to unionize. You said you would allow their voices to be heard, but that's not what remaining neutral really means, not using your vast power to intimidate your employees. You say you've focused on lending to small businesses and growing the economy, but I look at your actions, not your words. Instead, we see all of you spending billions on stock buybacks. You say that climate change is a threat to the entire economy, but you drag your feet when it comes to investing in new technology and the jobs of the future.